Market comes off the morning lows in thin year-end trading, but mid-caps are bearing the brunt. IT and realty are the weak spots, while metals and healthcare are exhibiting some strength.
Reserve Bank of India, in its financial stability report, has flagged the rise in write-offs, especially by private banks, saying these could be masking worsening asset quality in the retail credit segment.
Ease My Trip co-promoter Nishant Pitti is likely to exit the company via the sale of his 14.2% stake. Nishant had earlier divested around the 14% in September for over 900 crore rupees. The move raises eyebrows with questions around the motivation for the move.
EV player Ather Energy's rupees 4,000 crore rupee IPO has got SEBI's green light. The fresh issue of shares to raise rupees 3,000 crore will help it expand capacity by 3.5 times. Two-wheeler maker Hero MotoCorp will remain its biggest shareholder.
And Brent rises above $74 a barrel after US inventories declined and China's manufacturing activity saw a positive expansion in the month of December. With this recovery, oil is set to close 2024 with a modest loss of nearly 0.5%.
Hello and welcome to Halftime Report. I'm Lata Venkatesh and with me is my colleague Hormaz. Hormaz, pleasure to be anchoring with you. For the first time in my life, you've always been on opposite sides of the table. Well, we are meeting at a time when the market's keeping us guessing. When we wound up on Bazaar, the markets were staring at an over 1% cut for the mid-cap index and about a 0.7-0.8% cut for the Sensex and the Nifty as well. At its lowest, the Nifty had gone way below the 23,500 mark to about 23,450 thereabouts, and that was seen as a bit perilous. But the last 1 hour has been kind to the bulls, and we have seen a remarkable pull-up, led, guess by whom? Kotak Mahindra Bank of all things.
Indeed. And that is the case, right, with most of these banks like Kotak, IndusInd not performing all through the year, even heavyweights like HDFC Bank not doing well, and that shows because another single-digit year for HDFC Bank. But yes, Kotak Bank is the one that is leading the recovery on the index, and almost 130-point recovery now from the lows of the day is what is also contributing to the recovery, though, is Sun Pharma and PSU banks led by SBI. They are the ones that are contributing to this recovery that you are seeing from the lower levels in today's session. Of course, we are set to end the year with gains of around 8 to 9%. But the bigger takeaway is the fact that this will be the 9th straight year of positive returns for the Nifty.
You know, I'm less impressed by that number. Let me tell you, GDP growth of India is higher every year before the previous. Markets are somewhat of a reflection of the GDP. So, I mean, yes, there are times when the market gets ahead of itself and then you have a down year. You have financial accidents. But as a rule, markets must end higher every year in a country where the GDP ends 7% or 6% higher every year. Would be the way I would look at it. I'm less impressed by these numbers, but more impressed by these individual pockets that have done 100%, the EMS companies, hotel companies. But just a word on this recovery in the market. Well, for one, I rarely have the opportunity to say, I told you so in markets. I mean, I'm always listening to the experts. But there was a buzz in the market that today, with thin volumes, NAV management will come to the fore in the latter part of the day. Let's see. We have still about 3 hours of trading left. So things can go any way. But the expectation is with the cat away, that is the big traders and the big probably foreign funds away, it's possible that in the last 2 hours of trade, traders and funds are able to push up important stocks, SBI, Kotak Mahindra, HDFC. These would be in everybody's portfolio and it would be to everyone's advantage if those stocks did well. To be fair, the mid-caps have seen a lot of news-driven stocks also doing well. RVNL got an order and that's kept that stock buzzing. Likewise, we've seen decent gains coming in BEL, the defense stocks generally, all of them rising. So, there is some method.
You are not impressed with the Nifty returns, but let's ask if Vineet Arora, the managing director at Nav Capital, is impressed with the Nifty returns that we have had this year. Vineet, good afternoon. Thank you for joining in. Firstly, wishing you a very, very happy 2025. How has 2024 been for you? Would you be impressed taking a 9% return on the Nifty, considering the fact that A, the broader markets have done very well, and B, the fact that we have had 9 consecutive years of positive returns for the index? Do you expect some bit of exhaustion creeping in to the markets at the start of the new year, or do you expect another positive year for 2025 as well?
I think a bit of exhaustion will continue as we go into 2025. We've got some headwinds. We've got US elections, which has just happened. Trump will come in. We don't know the policies, what will happen. We've got budget coming in a few weeks' time. And of course, the corporate earnings, which have been a bit muted last couple of quarters, probably largely due to the lack of government spending, which has kicked in towards September. Also, we have to compare it, from a FII perspective or FPI perspective. We have to look at how the global markets have performed. So if you look at YTD, we've got S&P, which is up about 23%, Nasdaq, which is up about 28%, as compared to Nifty, which is up about 8% odd. So global investors will chase where the money is going. And I think another factor which has contributed to it is the US Treasury yields, which were at about 3.6% sometime back, firming up at 4.5%. So all that has led to money flows more into US. A lot of fund managers are sitting on cash on the sidelines, waiting to see what's going to happen. We remain bullish on India. I think it's been a good correction which has happened in 6 months. The markets are down about 10% from the peak. You cannot have one-way secular bull run. So from that angle, I think the markets are forming a bottom. They are consolidating, and they should rally post the results, which some of the sectors should do better than the other sectors.
Okay. Hi, Vineet. Good to have you with us on the show.
Hi, Lata.
More broadly, the year that was, or year that is about to end, has been very kind to mid-cap and small-cap stocks. While we may bemoan that there is exhaustion in the Nifty, and from the October highs, or the September 27th highs to be precise, it's off by about 7-8%. The mid-caps and small-caps are still, like 20 to 30% higher in most cases. Do you think exhaustion may come in there? Exhaustion or even disappointment?
Some disappointment can come in there. Again, small caps, mid caps, a lot of sectors which have done well, whether it's infra or whether it's solar, which has been in a bit of frenzy off late, or new age tech. A lot is dependent on the government spending. So some exhaustion might creep in, but there are plenty of gems which are still available in that sector. We are up about 60% for the year as compared to small cap index, which is up about 25-26%. So we've done well. We've had a good year, and we continue to believe in the small cap, mid cap space. I mean, we don't even have a single large cap in a portfolio. We try and follow where the government spending is happening in the sectors which are going to do well. I think there's a lot of juice still left there. While they've been actually doing better than the market even in last 6 months. If you see, while Nifty or Sensex are down about 10%, mid cap, small cap are down 5 to 6%. So they've held up quite well despite the exhaustion.
I agree with you. I didn't have much information on most of your top 10 holdings. And so I tried to go to Trendline. I tried to get information. But wouldn't investors worry that they don't find any public research on the kind of stocks you invest in? Wouldn't that be a spot of bother?
It is a spot of bother, and public generally tend to follow the frenzy, and that's not a good sign. But if you actually do a bit of deep dive, you actually spend time with the companies on the ground. Like I spend almost 10 days traveling all across different cities to India, and now we are building up an India office as well for a deeper penetration. The markets will, there are plenty of opportunities, but you need to actually go and visit them and see them, because data points are very sparse. And essentially you're betting on the founder or the promoter or the management team. So investing in small caps is like investing into, onto the people, more on the people than on the business, because it's a people-driven, business. It's not reached a scale where they have a very professional management. They'll hire B school graduates. It's still very, very basic. So you need to really roll up your sleeves and do that hunting because no analyst will cover these very, very small companies.
Absolutely.
Indeed. But Vineet, you mentioned you do not have any large cap stock in your portfolio, and a majority of your holdings in the Global Opportunities Fund comes within the IT space. So would it be fair to assume that most of these names would be mid-cap IT names, say the likes of Persistent and Coforge, because they have been the ones who have been the outperformers compared to the TCSs and the Infosys? But do you expect this mid-cap IT outperformance to continue into 2025, considering the fact that a lot of these large-cap IT names are facing company-specific issues of their own?
So, we can define IT as a broad sector, but if you look at the subsectors, so we are into none of the services sectors into IT. We are into, data center-based SaaS platforms. We're into data centers. We are into cybersecurity. We are into corporate trainings, which have held up quite well. The larger players, when it comes to IT services, where India has been a service provider, they have taken a hit. And because they're dependent a lot on the global markets, and global markets have been, from a GDP growth perspective, have been relatively subdued as compared to India.
Okay. But Vineet, where are these stocks listed? The ones I know, I was looking at your top 10 holdings. That's when I realized I'm hardly prepared for this interview. E2E Networks, Last Mile Enterprises, TCC Concept, EFC India Limited, TAC Infosec Limited. Are these BSE listed companies? Where are they listed?
So EFC and TCC are BSE listed, in process of migration to, on listing to NSE as well. E2E is listed on both. Then, of course, TAC Infosec is actually a SME stock. It's India's foremost cybersecurity firm with clients like NSE, HDFC Bank, and global clients like Google. Very interesting businesses, but of course, and these are all businesses which have been literally bootstrapped, grown with very little capital. In fact, L&T took a 21% stake in E2E post our investment at almost more than twice the price of what we invested in September. Again, the challenge remains data sets are you don't get much data onto these stocks, so you really need to spend time on that. But these are the companies, I always believe that no large cap was born large cap. These are the smaller companies which gradually become cap, mid cap, large cap. You find them, work with them, spend a lot of time with them, and that's where you'll find your multi-bag. Typically, you get 7.
I'll tell you where lay investors' worry would come from, including mine. We have seen the SEBI pulling up a lot of companies which are trying to list on the BSE SME exchange at absolutely fantastic, subscription levels, sometimes running into 5-figure subscription levels. Is there not a danger of someone taking you for a ride in this space?
There is, and there have been some issues which kind of, where there are no data sets and the companies are very small, and there's been a lot of hype going on in the sector. So one has to be very, very cautious when it comes to SME investing. SEBI should actually, and they've on the right track in terms of increasing the disclosures which merchant bankers have to do while doing the IPO. I think that is more critical. And you'll find a lot of these gems in that sector actually. So, E2E, which almost has $1 billion market cap today, did IPO at an enterprise value of 60 crores about 6 years back. Similarly, one of our picks, Insolation Energy, did an IPO at a valuation of 100 crores. The market cap is close to 9,000 crores today, with a PAT now, currently a PAT targeted at about 150 crores. So imagine a company an IPO 2 years back at 100 crore valuation, and today you're sitting on 150 crore PAT. But again, you're betting on the promoter, so a lot of hard work needs to be done. Okay. You just can't follow the frenzy.
Okay, well, Vineet, let me, I'm being warned we're out of time. So just leave us with one quick advice for 2025 and one quick prediction for 2025. Names of sector, stock, anything.
So IT services, broader, I think we're bullish on data center sector because India consumes a lot of data and we hardly have, we're bullish on real estate and infra and renewable energy. So these are the 3-4 sectors we continue to remain bullish on, which comes on back of government spending essentially.
Okay. We'll take an interest and continue to look at the stocks that figure in your top 10. Thank you very much, Vineet Arora, for joining us, and have a great 2025.
Thank you. Happy New Year in advance. Have a blessed year.
Thank you.
Indeed, that was Vineet Arora there of Nuff Capital. And time for a short break. More on the markets and specific stocks on the other side. Stay tuned. Welcome back, and the bigger takeaway is that today is the last trading day of the year. It's the last day of the year as well, so it's time to look back at how the year has been. And one of the biggest constituents of the Nifty, which is the financials, the Nifty Bank, that has underperformed the Nifty over the last 2 years now. Abhishek is joining us to tell us how these banking names have fared in 2024. Abhishek.
Well, as you mentioned, Homas, over the last 2 years in a row, Bank Nifty has actually underperformed Nifty with respect to returns being given to shareholders. So, Bank Nifty had massively outperformed Nifty in CY of 2022. So, over the last 6 years, if you take a look, Bank Nifty has underperformed Nifty, Nifty giving a return of almost 2.2 times, but Bank Nifty up only 88%. So, in last 5 years, Bank Nifty has underperformed Nifty 4 times, if you take a look at that data on screen for reference. And in CY24, both of them, that is Nifty and Bank Nifty, have given single digit together for the first time, in a calendar year. So RBL Bank, Bandhan Bank, DCB Bank, IndusInd Bank, Yes Bank and Bank of India, all of them have given negative returns over the last 6 years as well as YOY or in last 1 year as well. YOY, if you take a look, the highest decline is seen for unsecured lenders or lenders with exposure to unsecured segments like microfinance, credit cards, personal loan, etc. So RBL Bank has given the highest negative return, followed by IndusInd Bank, Bandhan Bank and IDFC First Bank, all of them giving a negative return of 30% to as high as 44%. Best gainers on a year-on-year basis has been Karur Vysya Bank. Now this is a mid-cap, small size bank, and perhaps they have one of the lowest or best in class asset quality with respect to gross NPA ratio being lower than that of HDFC Bank as well. ICICI Bank, followed by Federal Bank, Indian Bank and SBI, all of them have given return to investors more than 23% on a year-on-year basis. Back to you.
Wow, who would have thought out of HDFC Bank, ICICI, Kotak Bank, it will be Karur Vysya Bank who would emerge as the best performing banking stock in 2024.
For a very long time in the mid-year, it was UCO Bank and Central Bank which were the biggest performers. So, I mean, they had Bank of Maharashtra. I mean, it was a super performer for many months in a row because they had excellent capital and most of the bad loans had been written off. Right. But from the loan givers to the loan receivers, okay, India's automobile industry has more than tripled in size in the last decade. But now we are going to look at the automobile industry with a difference. This industry is aiming to get on par with global peers by shifting towards cleaner fuels. It's obviously necessary now to maintain sustainability. Our colleague Sudarshan Kumar has more on the industry's bid in 2024 to move away from fossil fuels. Sudarshan.
In 1983, India's automobile revolution was ignited with the launch of Maruti 800. Affordable, reliable and aspirational. It became the people's car, and since then, India's automobile industry grew exponentially. Today, India is the third largest automobile market globally. In last 10 years, the industry has tripled in value, from rupees 7 lakh crore in 2014 to rupees 22 lakh crore in 2024. But even with this growth, we are only half the size of China and a quarter of the US market. The goal to surpass both within the next decade.
Now in world, USA is number one. They have the size of auto industry of 78 lakh crores. China is 47 lakh crores and India is 22 lakh crore. Now we have a target that within 10 years, we will be number one in the world because of alternative fuel and biofuel.
And how will we do it? The answer lies in a new kind of fuels. The shift will be driven by three key factors. First, emission targets. India aims to cut carbon emissions intensity by 45% by 2030. Second, reducing fuel imports. Did you know that India imports 90% of its crude oil, spending $71 billion annually? Third is cost savings. Clean fuel vehicles are cheaper to operate. For instance, running a CNG vehicle costs just rupees 1 per kilometer compared to rupees 2.25 for petrol. So what are those alternative fuels that will drive the future? First up, electric vehicles or EVs. India's EV market is set to grow from $23 billion in 2024 to $118 billion by 2032. The government's target? 80 million electric vehicles on Indian roads by 2030. But EVs aren't the only players in the game. Hybrids are bridging the gap. These vehicles combine electric power for short trips and fuel for longer journeys. They are cost-efficient, eco-friendly, and ideal for a gradual transition to clean energy. Next up is ethanol. India is aggressively pushing for ethanol-blended petrol, targeting 20% blending by 2025. Brazil serves as a global example, using ethanol to replace up to 20% of its petrol imports, with 80% of its cars running on ethanol-blended fuel. Brazil has significantly cut its oil dependence. India could follow a similar path. We also have CNG and LNG. They are cleaner and more affordable alternatives to petrol and diesel, and their adoption is growing rapidly. Sales of CNG passenger vehicles surged by more than 30% year-on-year in the first half of FY25, and the market is expected to grow at a CAGR of almost 7% in next 6 years. Last is hydrogen, the fuel of the future. Clean, versatile, and sustainable. It's a game changer for heavy vehicles like trucks and buses.
Hydrogen is the future. And the green hydrogen is the future. Because by electrolyzer process making hydrogen, for 1 kg of hydrogen we need 150 unit of power. Now the municipal waste are by using biotechnology generating biomass using for getting it methane in biodigester, and from that methane we can convert into hydrogen or we can convert into CNG.
2025 is not just another year. It's the year when clean fuels take the driver's seat in India's automobile story. Over 40 new car models are expected to hit the Indian roads in 2025. And guess what? Only 20% of them will run on petrol or diesel, and that too with most of them having the hybrid option. The future of mobility is here, and it's cleaner than ever. Electric vehicles or EVs are set to dominate 2025. From Maruti to Tata, Mahindra to Mercedes, every major automaker is going all in on EVs. The goal? To accelerate towards 30% EV adoption by 2030. And that is up from just 6% today. But EVs aren't driving the change alone. Ethanol-powered vehicles are making headlines. As per Roads Minister Nitin Gadkari, big names like Tata, Mahindra and Hyundai are set to launch 100% ethanol-powered cars within the next 6 months. Meanwhile, CNG is steadily solidifying its place as a preferred fuel option in India's green mobility shift. In 2025, Honda is set to join Maruti, Tata and Hyundai in offering CNG-powered models. Tata will introduce the Curvv in a CNG variant, while Maruti plans to launch next-generation CNG versions of its popular Ertiga and Brezza. Adding to the momentum, Honda is expected to unveil a CNG variant of its Amaze sedan. The future of India's roads is not just about speed, it's about sustainability. It's the year clean fuels go mainstream.
So, that's an excellent package that you have put together. I would just add one thing. Can we also think of mass rapid transport? EVs, all well, much better than fossil fuel, but a personal vehicle in a city like Mumbai is something that we should try to wish away and replace with public transport. I think that's also a faster way to get to a cleaner environment and unclogged roads. But just before Sudarshan took off on clean fuel, we were discussing with Vineet Arora on small index. Now, actually, the SME, the small cap IPO index, has remained in focus throughout 2024, generating massive subscription numbers, often running into 10,000 times. Returns as well for investors were huge, rising over 2.5 times in 2024. Now, Hormuz has moved from my neighboring chair to the video wall to explain the fireworks that we saw in the SME IPO space. Hormuz.
You know, SME IPOs continued to make headlines this year as well, mostly for the eye-watering subscription figures that they generated, but also for some wrong reasons as well. Now, after nearly doubling last year, the BSE SME IPO index has jumped nearly 2.5%. This time around, gains of nearly 140%. Now, since 2021, the number of SME IPOs every year has continued to increase. Now, this time around, we had a total of nearly 250 companies going public, which are SMEs. And if that number is not enough, they raised a cool 8,700 crore rupees as well. Now, what is so special about this 8,700 crore? Now, that figure is the sum of the funds raised during the previous 5 years put together. Now, if that is not enough, the next figure is even more eye-watering. Now, these 240 SME companies that went public this year received bids worth over 12.5 lakh crore rupees. That in the quest to raise close to 9,000 crores. The SME IPOs were back in the news recently because of this company called NSE Infra, which became the most subscribed SME IPO of the year, got bids of close to 14,500 crore rupees and ended its trading debut almost double of its issue price. But is NSE Infra the IPO that got the highest bids this year? Not really, because Ganesh Infra World takes that title, getting bids worth nearly 23,000 crore rupees. It planned to raise 100 crores through its IPO. Others in that list also got bids anywhere between 17,000 crore to 20,000 crore rupees. Now, cumulatively, out of the 43 SME IPOs, or nearly 20% of the total SME issues this year got bids worth over 10,000 crore rupees or more. If NSE Infra was the most subscribed IPO this year, which were the other ones? Now, HOAC Foods, Hams Bio, KC Energy and Infra, and Toss the Coin is all seeing subscriptions of over 1,000 times. And of course, one must know that these SME IPOs have a smaller size. The number do appear elevated after that. But that also does not mean that there is no demand. All 5 of them saw listing day gains of anywhere between 90% to as high as 370%. So which is the issue that has generated maximum returns this year? It's a company called Oves Metal, which is up over 1,000% from its issue price of 87 bucks. The rest two are up anywhere between 700% to 1,000%. A note of caution here, most of these names are under the extra surveillance measures or ESM framework under various stages. Now, if these are wealth creators, there are wealth destroyers also. MVK Agro, Baveja Studios and others have either halved or are down nearly 70% from their issue price. With thinly traded stocks, little or no institutional interest and no widespread ownership, the scope for manipulation among SME IPOs is a lot higher. Therefore, market regulator SEBI has already come out with tighter listing norms for these companies, and they are potentially stricter rules that are also in the offing. Therefore, it will be interesting to see if these numbers are affected in any form post these stricter SEBI rules, or will this chota packet continue to give bada dhamaka returns in 2025 as well?
Okay, that's very well put, Hormuz. Both the fireworks as well as the caution that we should always keep on the table, and that the regulator has been reminding us of. Let's take a break. When Hormuz was giving us all those fantastic statistics, we saw the Nifty recover a goodish bit, and it's now pretty much close to where we ended the day yesterday, 26,600 plus. So let's wait and see. We're going to get a technical analyst, Sudeep Shah, the head of technicals and derivatives at SBI Securities, joining in with some midday and midweek trading strategies.
Welcome back. Almost into the green now is the index, and just a couple of hours ago we were in conversation with Shilpa Raut, and she had mentioned that she's expecting some more short covering to continue towards the later part of the day. And that's exactly what's transpiring on screen as well. But is that likely to continue going forward as well? Sudeep Shah of SBI Securities is joining in on the show. Sudeep, good afternoon. Thank you for joining in, and firstly wishing you and your team a very happy new year. Is this bounce likely to sustain, and what happens now that the Nifty runs into this 23,800 to 24,000 wall? It's not been able to sustain all through the last 8 to 10 sessions now within that range. Do you expect first to get to that level, and once it gets to that, what happens after it? And also couple that up with your stock recommendations for the afternoon.
Good afternoon, Homas and Lata, and wishing you and the entire team at CNBC-TV18 a fantastic coming new year, as well as all our listeners. Homas, you put it up in the perfect way that first of all, are we expecting any bounce back? The zone of 24,000, which was not able to cross in the last 6-7 sessions. And finally, yesterday we saw that breakdown below the 200-day exponential moving average, which is placed somewhere closer to 23,700. The gap down opening today, followed by this recovery throughout the last couple of hours, at least is encouraging. But what is important in the last few sessions, what has happened is that throughout the day, there has been recoveries, but the last hour has always seen a sell-off. So for me, the first level which is important would be 23,700. Whether this level is being crossed and sustained, then yes, there could be some hopes of a recovery back till 23,900, 24,000 levels. So 23,700 zone on the upside would be the first resistance. Once indices crosses and sustains above this, then 23,900, 24,000 zone could be on the cards. On the downside, today's low of 23,450, 23,500 mark would mark as an important support zone because it is derived from an upward sloping trend line zone. So here, this is important support from where it has bounced back. So 23,450 to 23,700, 23,750 is the range that we are expecting the Nifty to trade into. And now what is happening is that even if we see the IT index from the lower levels of 42,500, 42,600, IT index has shown a good recovery. So we feel that the IT stocks, the pharma stocks, they could support the markets going forward in the next couple of sessions in the Nifty's bid to recovery. Now, the two stocks that are on our radar are, the first one is from the pharma space, which is Ipca Labs. Now, here, there has been a consolidation breakout on the upside. The stock is already trending upside on the weekly as well as the monthly charts. Even on the daily charts, there is an extremely good setup that is visible here. So this could be bought with a stop loss at 1650 on the downside and a target of 1750 on the upside. The second stock that is on our radar is Jubilant Foods. Here also the stock has broken its previous swing highs, which were in September, which is closer to 710. And now the entire setup on the weekly, monthly charts is quite promising, and the stock looks good for 750, 755 levels. So this could be bought with a 705 stop loss on the downside.
Okay, thank you very much for all those levels, Sudeep. And you have a brilliant 2025 yourself. Let your head down, 31st evening. Okay, now before we go into a break, here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store. Welcome back. It may be the last trading day of the year, but it's not a day when we don't have big news. Some of the stocks in focus today is what we are going to tell you today. Lupin is one of them. The company has acquired anti-diabetic medicine hum insulin in India from Eli Lilly. Vinny is here with the details. Tell us.
Good afternoon. Yes, so this is a good addition that's actually coming into Lupin's diabetic portfolio. Now, this is Humicillin is what they've acquired in India from Eli Lilly, and this is treating type 1, type 2 diabetes to improve the blood sugar control. Now, do not forget that Lupin in Q2 FY25, the diabetes portfolio of Lupin, that grew by 19%, outperforming the industry growth, the IMP growth of 9%. So this addition also furthermore adds to their portfolio in terms of the segment, and Lupin wants to focus on the diabetes segment. They've mentioned this also previously in terms of their focus areas. Other than that, they'll focus on cardiology as well as respiratory, but this is a key focus area, and that is why a good move coming in from Lupin. Now, other than that, there's one more news flow that's come in, that in the US, we had Teva, who had actually filed a petition against Amneal, and now there's an order that has come in that this petition is en banca rehearing the litigation that they had filed on Amneal. This was for a drug that was generic Pro Air, which they're talking about. So that this drug is was actually sold by Lupin as well. So this becomes a positive because these are two big players who are still under litigation. So till then, there will not be any much pressure for the sales of this drug for Lupin, and there's a delay in terms of launch that could be expected for Teva as well as Amneal for the generic Pro-Air drug, and that is why that is a positive for Lupin.
Will hum insulin result in more gains than 80% that has already gained for Lupin this year? Dekhenge hum log. But then Vivek is joining in now for some news on Ashoka Buildcon that came in earlier this morning. Vivek.
Well, that's right. So Ashoka Buildcon, an interesting development there. A positive divestment of assets that the company has done. Positive because the valuation is quite attractive as far as Ashoka Buildcon is concerned. Now, the company and the subsidiaries have managed to sell almost 11 SPVs which held HAM projects. SPVs are special purpose vehicles, and HAM projects are hybrid annuity model projects that the company had incorporated. Now, these particular projects have been sold to funds that are managed by Edelweiss AAA, earlier known as Edelweiss Alternative Asset Management. The stake sale has been done at a value of close to 2,324 crore. Now, analysts tell us that the implied valuation means that Ashoka Buildcon has managed to go ahead and double the equity investment that they had made in these particular assets. Now, as far as this particular deal is concerned, a few approvals are pending. Number one, the lenders to the SPVs have to give their nod. NHAI, the National Highways Authority, as well as CCI, all of them have to give their nod before this particular deal can go through. Remember, all of the assets, barring one, have achieved commercial operation date. So most of the assets are actually operational. Now, the deal was announced just prior to market open. Interesting development and a slight positive as far as Ashoka Buildcon is concerned.
Okay, thanks a lot for that, Vivek. We have to take a very quick break, but we're going to get you more such stock-specific gems after this break. Welcome back. Before going to the break, I promised you more stock-specific action of individual companies. Hormuz has two more on his plate. Varun Beverages first.
Varun Beverages indeed, and it's a very interesting name because it's continuing with that trend that it has been holding on to since it listed back in 2016 of positive annual returns every single year since it listed, and it's up 30% this year as well. Now this morning, Antique came out with a note on Varun Beverages. It was a buy recommendation, a 710 rupee price target, which is around a 10 to 12% upside from current levels. They speak about two very key aspects that the company has engineered in the recent past. One of them is the QIP that they recently closed. They raised 7,500 crores from that, and then they said that most of that money will be used to retire debt, and once that happens, Varun Beverages will become a net cash company. So that is a positive. The other bit is the acquisitions that they have made in the African geography. Now what they say is that after these acquisitions, their share of international volumes will go up to almost 36.5% by 2026 from 19.5% in 2023. So that, and as a result of which they are expecting their overall volumes, revenue and EBITDA to grow at a CAGR of 21, 24 and 28% over a 3-year period. And so they are revising their 2024 EPS estimates marginally lower by 3%, but they have increased their 2025 and 26 estimates by 10% and 3%. So positive commentary on Varun Beverages. The stock not doing well in today's session, but has had a very good year so far.
It always stunned me that someone who's bottling Pepsi, but doing it steadily, correctly, is such a wealth gainer, such a wealth creator. And then why JSPL?
JSPL also because Nuvama met the management of the company and they spoke on a lot of issues. They spoke about the fact that they are in the process of resolving these pellet bottlenecks that the company is facing currently. And once these bottlenecks are resolved, they will be able to ramp up their steel volumes by almost 8.5 million tons by the next financial year, which is FY26. Now, they also spoke about the steel capacity, which is almost 3.5 million tons of steel capacity that is likely to be commissioned by the end of this financial year. And they also spoke of coal blocks, where they said that they are in the last leg of approval. Mining will begin in the first quarter of the next financial year, which is FY26. Now, for the fourth quarter this year, Nuvama is saying that that looks promising because of the fact that the steel prices are higher, volumes are also robust, but they are reducing their FY25 and 26 EBITDA estimates by 6% and 4% to account for potentially lower volumes for JSPL. Regardless of that, they still have a buy recommendation, 1292 rupee price target, a significant upside from where the stock currently is.
Okay, so one smokestack stock and one consumer consumption stock, so to speak. Thank you very much for that. We'll take a quick break and thereafter, all-important discussion on commodities. Manisha Gupta will be joining with Kunal Shah, who heads commodities and currency research at Nirmal Bang. Welcome back, and joining us on the show now is Kunal Shah. He's head of commodities and currencies at Nirmal Bang. Kunal, hi, thank you for joining us. And well, last day of the year, and we still are looking at some movement coming in for many of these commodities, especially the precious metal prices, where the prices have continued to decline. Gold is sliding. Silver is now below $29 an ounce, far, far away from the kind of all-time highs that we saw in this year for both of these commodities. Let's start with gold first. And what is your sense as we step into 2025? Would you want to divide the year into two? How should one trade this one?
We remain very optimistic about the overall outlook for gold for the year 2025. And we believe that the rising debt across the globe, mainly in US, that is going to be the main theme. We don't know what's going to happen during the year 2025. So far, it has been a good year. There is no delinquencies. There is no defaults in US. Things are looking good. But we don't know, with such kind of debt and with the rising bond yields, the inflationary expectations are also moving up. So it seems that right now there may not be a very bullish trigger in a shorter term, but as we move towards 2025, we feel that the odds for gold to move up are very high rather than go down. And there is going to be a lot of volatility. There is going to be a lot of uncertainty, but the overall outlook of gold, I think, is still very bullish. And we continue to maintain our targets of $2,900 and $3,000 of COMEX. And in India, 85,000, 86,000, very likely. May take time, but I'm very confident that the outlook is very bullish.
Kunal, also, how would you look at the dollar index then? Because we've seen very strong gains onto this one, 6% up in this year. Are you looking at further gains as we step into the new year?
I think it's very tricky because if you look at US 10-year bond yields, which are right now at 4.6%. So if I am a money manager, I'll park my money in the US 10-year benchmark if I'm getting 4.6% interest rate. So that's the reason why there has been a major inflows in the US. A lot of people are, again, taking their money back to US. So it's more to do with the structural shift which is taking place before Trump is joining. But if you ask a currency which is having a $36 trillion of debt, that debt is soaring by $2 trillion every year. That has been a trend from last 5 years, and that is likely to be the trend going forward. So that kind of currency may weaken sharply going forward, not now immediately, but may take some time. After the Trump comes and he comes up with his own policies, I believe 110, 111 should be the peak out level for dollar index. And the fundamental of the dollar index indicates that there is likely to be more weakness going forward rather than a major strength. So remember, US is also on the verge of, they are saying that the number of interest rate cut in the year 2025 will be 2 as compared to 4 earlier. But we don't know. Things can change quite rapidly. And we've seen that central bank saying that there will be only 2 rate cuts. And last time, before the COVID, they came up with 150 basis point of rate cut. So you never know what is going to come. But I believe that the upside is very limited from here. 110, 111 maximum upside.
All right. Oh, well, absolutely. Much would depend also on what Trump does and how do other countries retaliate in sense of taxes and tariffs. I mean, that is something to watch out for. But silver then, and the kind of decline that we've seen onto this one has been quite sharp. Multi-week, multi-month lows rather coming in for silver now. $28 and around is where it's trading. There are speculative short positions being created onto this one. How would you want to trade here?
See, the fundamental of silver is still bullish. There is no second thought. So with the rising dollar index and stronger dollar, we are seeing the temporary correction in the prices of silver. If you see, the silver market continues to remain in a deficit. The production from secondary mine may move up in the year 2025. We are expecting zinc mines to come up with more production going forward. So more and more zinc is going to come in the market, and that will lead to a higher supplies of silver also. But it's still a strong clean energy story. The photovoltaic demand will continue to move up even in the year 2025, and supply side is still not very strong as of now. So I will still continue with the bullish outlook on gold and silver. It is likely to get benefit from gold also. When gold starts moving up, even silver is likely to get a lot of traction. Right now, China PMI and the Chinese economy seems to be again slowing down. They are waiting for the announcement by US Trump that what they are going to come up with as far as the policies are concerned and tariff are concerned. So right now it is muted. I don't see a significant downside. Another dollar or so. It's accumulating. It's a level where one should start accumulating silver.
Point taken that. So gold and silver should be your friends when you step into 2025. The dollar index, the run-up that we've seen in 2024, perhaps may not continue in 25. We've done pretty much a lot of that rally already. So that, of course, are cues as we step into the new year. Kunal, thank you so much for joining us and a very happy new year to you. But with that, that's all the time that we have on the show. Business Lunch will take all the action forward.